Tuesday, the 20th of June. Now, what I'm going to do today for the live trade is a little bit different. Rather than just taking a trade as normal and then posting up, which is what I do every week, I'm going to trade in a slightly different way today. I'm going to show you a couple of different ways to trade, hopefully over the next couple of weeks. Basically, what I'm going to do this week is show you conservative trading. Now, a lot of people, they get into trades and they think they just have to hold their position until it reaches a predetermined take profit target. Now, that can be a very effective way to trade, and the vast majority of the live trades that I post, I am in a trade until I reach round about 1-to-1 risk to reward. However, it's not the only way to trade. As I've mentioned a few times in previous videos, when I did start to become consistently profitable, it was by trading in a very, very defensive way. What I would do is I would get into a trade, I would have a management point. So let's say we're getting into a trade here on a buy position, we have a management point up here. What I would do is, in fact, let's put the management point at a realistic place. So the management point would be the previous little high here. What I would do is I would get in the trade, I would remain in that trade until the market came up to that management point. If it didn't reach the management point and came down, it would stop me out as normal. But once it reached that management point, I was then looking for reactions. If the 5-minute candle showed rejection at the management point, what I would do is, depending on how much profit I was in on the trade, if the market started to move back against me, I would just exit the trade for a very, very small profit. If it broke through the management point, I would hold on to the trade and then look for a larger profit return on that particular entry. Now, what it ended up doing was, when I was trading, I would trade a lot more often, first of all. Now I only take really one trade per day, but back then I would take every setup that I seen. So sometimes between sort of 3 and 6 trades in a day. Of those trades, I may have one trade where I'd lose a couple of points, then I'd have 2 trades where I'd maybe make 3 points, and I'd have another trade where I'd maybe make 4 points. And what it did is it added up, or still added up, to a profitable system. And it's the first time that I did become consistently profitable. So what I'm going to show you is a defensive entry into whatever trade it is that I end up taking today. Now, because I simply post whatever trade it is that I take on the Tuesday, there's a high probability that this trade will either get stopped out at break even, or I'll have a very, very small profit on the trade. And that's one of the drawbacks of this type of trading. It means that it can be frustrating, first of all, because you are having a lot of trades with break even, so where you come back out at break even, and then what's even worse is you will then have to watch that trade maybe turn around and go back down, where you would have made a good return if you just held on. But what it is good for is, if you're starting and if you are not very good at picking out those targets for your trade, and you find yourself holding on to trades for too long, and they end up turning against you when the market's giving you lots of evidence to get out of the trade, and you end up suffering a loss, this way of trading can be effective. And you don't need to just blindly follow what you read on things like Investopedia, where they say you have to hold a trade to 1-to-1 risk to reward, 1-to-3 risk to reward, whatever it may be. So that's what I'm going to do for this week. The high likelihood is it will be a very small profit or a break-even trade. What I will do next week is I'll likely have a slight adaptation of it, where I'll look to take partial profits at a certain area and then run the remainder of the trade. So let's see how we get on today. It's just about 8 AM, we're just about the open, so I am going to be waiting for a setup, and then I'll come back onto the video. Okay, so we're just coming up to 9:30 now. I've entered into a short position on the FTSE 100 after this signal candle right here at 9:20. Now, ideally, what I was looking for down here was a buy position. Everything's set up for the buy position, and I got a signal candle right here at 8:25. However, the 8:30 candle reacted so quickly, it actually gapped up a little bit and then rocketed up into the zone up above. Because it reacted so quickly, I just completely missed the trade. There was no way for me to react in time. And then, unfortunately, I just had to sit and watch the market rally all the way up into the 755 8th level. Doesn't happen very often. In fact, I can't remember the last time it happens, but that is also part of being a trader. Sometimes you will miss your setup, and then you'll just have to watch as the market does exactly what you were looking for. I actually believe this was something to do with Carney coming out and saying that now isn't the time to raise interest rates. And as soon as he said that, the market reacted, and we had a surge of bullish momentum. Now the market has came up into this zone up above. It's attempted to make a small pullback and then continuation, and that has subsequently failed. After we got the 920 candle, I was then happy to look for a short position, enter into that short position, really to take the market back down at least to the 7537 level. Now what I was really hoping for was a trade with a slightly tighter management point. This one here was really what I was hoping for, and then I was going to take the management point as the MA200 on the chart and show you that if the market reacted there, how I would manage the trades, being very cautious. So taking a cautious approach to the entry. Let me just close these emails. Okay, sorry, I was just turning off the emails. So what I was then looking for was the management up at this area. But what we actually got was the reaction after Carly speaking, and the market just absolutely took off. I missed the trade, and there wouldn't have been any management at this point either. Now on to this short here. Management point is a little bit further down. Really, I suppose I could be looking at these levels. Also 7538, the previous swing here, because potentially what we're seeing is the swing, the market coming down, breaking up above, and then pulling back to test at these levels. So we'll be watching between this level, and you can see the green line on the chart around about 7537. Watching for reactions down here. If we see the reactions, I will just come out of the trade. What I'm looking for is a nice break through this level. So let's see how this trade gets on. There's nothing to say that the trade won't simply move against me and stop me out. However, that is what I am now looking for. Okay, so the market has reached this little management point that we've identified on the chart. So now what I'm doing is watching to see how the market reacts on the 5-minute candles. Really what I want to see is just a nice clean break of this level. So a close down below the 7537 area. If I don't see that, then what I will do is close the position. Now, as I've mentioned, this is what I would consider conservative trading. It's how I first became profitable when I first started trading. I was very, very risk averse on all of my trades. If I didn't see exactly what it was that I wanted, I just came out for a couple of points of profit. Now, it's not how I trade now. If you watch any of the other live trade videos, you know how I trade now. But this, what I'm trying to do over the next couple of videos is rather than just posting live trade videos, which is what I do every Tuesday, I post the trade that I take. I'm trying to show you that there are lots of different ways to approach the market. You don't just need to follow the textbook definitions of trading, mainly because the textbook definitions of trading, what I found when I was learning, the textbook definitions, the YouTube videos out there, they were all mainly nonsense. What it comes down to is finding something that works for you, finding something that you are comfortable with and that you can execute repeatedly, doing the same thing over and over and over again without starting to fall into emotional trading or making mistakes. Now, with this type of trading, one of the main things for it was that if there were reactions at these levels and it pressed up, and let's say that candle closed up here somewhere, I would then take a small loss on the position. Now, for some people, it doesn't work with their trading psychology because you're having to take small losses, and then what happens is sometimes the market then breaks down very, very strongly, and you end up missing out on what would actually have been a strong win, and you took a couple of points loss. But what I found for me was that it took away the sort of the ambiguity of the trade. So I didn't really know or didn't understand likely targets for markets. So I was just getting into a trade, and then I'd plan the trade so much, I'd know exactly what I was looking for. Then I'd get into the trade. As soon as I hit enter into the trade, I would suddenly have no idea what I was doing. I didn't know where I wanted to exit. I didn't know what to expect from the market, and this allowed me to take those worries and take those thoughts out of my head, because I knew that at the management point, if I seen any reaction, I was exiting the trade. If I didn't, then I was looking to run the trade, and I had a couple of different ways that I was, or that gave me signs whether to stay in the trade or to exit the trade, using things like moving averages. So I'm just watching to see how this market reacts. I would really need a close below this 7537.3 level to stay in the trade. If not, I will simply exit the trade. Also, this trade here that I completely missed, if anyone, any of the zone traders managed to catch this trade, please let me know, because first of all, I'd like to know how the hell you managed to catch it, because it moved so quickly. I even waited, it popped up to here, I even waited to see if there would be some sort of pullback to get into that trade, but it did not come. So if any of you managed to catch the trade, very well done. Okay, so around about a minute left on this candle. What I will do is I'll pause the video, turn it back on just as that candle is finishing forming, but that's exactly what I'm going to do for this trade. Okay, so the trade, what we can see from this, I have now exited this trade only about 4 points out of the trade. Basically, as soon as I seen this reaction here and the close of the candle, I exited. Now, 99.99% of trades now, I would hold on to this looking for a stronger movement down, really at least into 7533, but more likely down toward this level at 7525. However, for the purpose of this video, what as I've explained, I'm trying to show you that there are different ways to approach the market rather than just showing live trades every week. It's better that I can try and sort of show you things that you may be able to use, or maybe that you haven't considered before in your trading. So what you can see is we had a small reaction here. The market then popped up, rejected once again. It looks like we are still seeing that bearish sentiment. As I've mentioned, I would be looking to take this trade down into lower levels on this market. But what it shows you is that you don't have to just blindly hold onto a position. If you find that one of your trading weaknesses is reading a market, or perhaps not even reading a market, but perhaps it is just how you act emotionally when in a trade. It's very common for people to get into a trade, and it's almost like a rush of fear as soon as you hit that button to enter into the trade. Suddenly you don't really have a plan, you don't really know what it is you're looking for, you're really worried that the market's going to move against you and stop you out. And if all of those things are there, and you are really struggling to deal with them and find a coping mechanism for them, then there's nothing wrong with trading very conservatively. Now, the important aspect is that you have to be willing to take the small wins, but also the small losses. One of the big problems with that way of trading that I just showed you is that if you are unable to cut the position, so if that was what I was looking for, the reaction right here, and it had closed just above my break-even point, and let's say I had -2 or something like that on the trade, you have to be willing to just exit the trade and take the very small loss, because what can happen is that you can take those lots of small winners, but then when it gets to the small loss, you think to yourself, what I'm going to do is I'm just going to hold on to this till it gets back to break even. I don't want to take a couple of points loss on this trade. It will almost definitely come back to break even. And then what happens is you start to get the market moving up and giving you full position losses. Now that does not work with the overall way you're looking at trading. Okay, so what I'm probably going to do next week is I'm going to show you a way very similar, but instead of just closing out the position, where I would look to take partial profits and then let the market run. I'm actually going to do a more in-depth video on taking partial profits and a few of the different ways you can use it to benefit you in your trading. But that's what I'm going to do next week. And then, very likely I'll just get back to normal, regular trading, so the way that I trade every day. Okay, guys, so as always, I hope that was helpful. I hope you've all had a great trading week. I'm James Orr, and thank you.